Very good morning and welcome everyone to our live trading room here at Admiral Markets. Glad that you could join us today on this Wednesday, the 4th of September. We're going to take a look at the market in, of course, just a minute. But before we do that, as always, you are aware of the risk disclaimer. The trading of foreign exchange and financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar and videos for educational purposes only. So I do thank you for your attention on that. And I do welcome you once again to our live trading room hosted by Admiral Markets. My name is Chris. Today we're going to take a look at all types of tradings. Yesterday we looked at swing trading. Yes, this is a live webinar, Victor, definitely. There's a live trading room here. Yesterday we were looking at swing trading, today all trading, and tomorrow we're going to take a look at intraday trading. So that's tomorrow, Thursday, same time though. And tomorrow we also have our educational webinar at 5 p.m. And I do believe we're going to take a look at risk management. Maybe not the most interesting topic or like the most exciting topic, but definitely very important. Okay, so we'll be taking a look at multiple time frames here, but I will do it a bit differently than usual. So more on that later on. Today we're going to take a look at today's focus. We're going to be defining the trend, spotting divergence, looking at fibs, support and resistances to identify key areas and zones where we can trade. All right. Make sure to follow Admiral Markets on Twitter and Facebook. And with that said, I'm going to introduce a manager of Admiral Markets, Michal, who will give you some interesting information.
Good afternoon, everybody. Thank you very much for a lovely introduction, Chris. Once again, my name is Mikhail Onokhov, and I will tell you a small story before we get to more serious stuff. My name is right here. You can always Google it. You'll find my page on LinkedIn. You can add me as a connection. I'll very much appreciate that. I'm a client relationship manager for Admiral Markets, which means my main job, my responsibility is to make the best trading environment for you possible. Here's my email, my phone number, and my Skype. You can always add me on Skype to ask a question or suggest a topic for a future discussion. Today I wanted to speak with you, and I'm very excited to do so because you all decided to participate in this webinar for one reason and one reason only. All of you are interested in Forex trading. All of you interested in Forex trading, and this is a great thing to be interested in because it's one of the best ways to speculate on the market. I'm sorry, I think I've opened up the wrong presentation. Yes, you've entered a brand new world, a world of investment, and you want to understand the process better, and you want to be successful. You're interested, you're intrigued, you want to become a Forex trader. And this is why you've joined today, to learn about this market a little more. Some of you are just interested. Some of you have experience with Forex already. Some of you trade regularly and have their fair share of losing trades. When you end up looking just like this guy, thinking about all the stuff that went wrong. But I'm pretty sure that most of the time you look exactly like this. Happy and motivated, like this guy. Because all of us want to be him. He's tasting success right now. He's very happy. Both of those guys have a very good suit on, a fancy watch, but only this second guy has just closed a great trade. And now he's tasting victory. And I bet it tastes really good. And I bet all of you want to taste it every day, every hour, and every minute of every day. And this is why you're here today, to get better, to get ahead, to be just like this guy. But what do you do to get there? Forex is not a walk in the park. To be successful in Forex, you must be able to swim with the sharks. And swimming with the sharks is one hell of a job that requires courage, strength, and of course, plenty of training. So how do you train for a job like that without getting eaten? How do you train to trade on a Forex market without any financial loss or the risk of financial loss? Well, I'll tell you how. This is what we show when it comes to swimming with sharks. You get yourself in a position when you're totally protected, like this guy taking pictures, and the sharks are swimming nicely around you. So you still get all your experience, but you don't have any risks involved. And this experience, when it comes to Forex trading, well, it does have a name, and the name is Admiral Markets Demo Account. Trading Forex, it does require a lot of practice. Just look at this Forex setup. Does it remind you of something? I can tell you that all those graphs, all those buttons, everything you have to pay attention to sort of reminds you of a cockpit of a plane. Look at this. I think the resemblance is quite striking. And before you actually start trading Forex, you must get yourself familiar with the market, and you must be familiar with the platform you'll be using. And Admiral Demo offers you all of that. It will offer you MetaTrader for the platform. It is the most popular trading software in the world, and it is the most popular for a very good reason. It is the best, and it offers tons of features for both Forex rookies and professionals. It will give you the wings, and it will be a path to victory. So I mentioned a pilot, and I'm showing you this picture of a cockpit before for a reason, because I personally think that being a Forex trader is a lot like being a pilot. You get the same kind of stuff happening to you all the time, and you must be able to make decisions fast, and your decisions must be correct. You must be able to cope with a lot of stress, and as a pilot responsible for the passengers, you will be responsible for your money, and you're now a pilot of your own Forex career. So think about a pilot. Before he's allowed to fly an actual plane, he spends hours of training on this kind of simulator. It's a flight simulator. Before they're allowed to take off with a plane, they have to show that they can do it in a safe regime. So they get familiar with all the features of the aircraft. They put themselves through a variety of different scenarios. So when the pilot flies and pilots the actual plane, he can make an instant decision. A simulator like this one, it does cost a lot of money. But you can get a simulator for Forex trading absolutely free. It will take you less than a minute to register for an Admiral demo. You get to test yourself in real market conditions for free for as long as you want, with absolutely no risk. And you're going to learn a lot of new things whilst trading on a Forex account. So in the second part of the webinar, you're going to learn a lot of new things, and I'm pretty sure Chris is going to be very thorough in teaching you them. So once the webinar finishes, those of you who don't have a demo account yet, go to admiralmarkets.com and get yourself one. Take less than a minute to register that. Those of you who are trading with other brokers, I suggest you give Admiral Markets demo account a chance just to see what we can offer you when it comes to real stuff. In fact, on Admiral demos, you'll be able to trade currency pairs and CFDs on commodities and equities, and you will trade with such a small spread that if I didn't just mention it, you wouldn't even know it was there. So it's 1 pip during daytime on all the major pairs, just 1 pip. If you don't believe me, take me to my word and go to Admiral Markets and see for yourself. Admiral Markets demo account will give you a chance to do so. So if you have any questions about demo trading, real trading, or anything else, you can always email me, call me, or find me in Skype, and just Google my name to see if you can find my LinkedIn page and add me as a connection. Thank you very much for listening to me today. I wish you best of luck in your Forex trading and plenty of learning today. Thank you very much, and I'll now pass the word to Chris.
Yes, thank you so much, Michał. Great words there regarding demo trading. Very useful indeed for building up that experience database and practicing Forex trading. Definitely. Very important process, just like paper trading is as well. Because when we paper trade, we start to build a pattern recognition database in our memory. Delanta also often refers to it as screening time. If you have seen our educational webinars, screening time is vital to just to see the patterns in the market move, because without that, it's just impossible. You have to see the market move. You have to see its price movements and behavior to get that referral and reference. Alrighty, let's go to a quick look at our Forex calendar, as you are well aware. And we're going to take a look at pound in 1.5 hours, and we have a CAD interest rate. So my typical approach to interest rate is that I don't trade that particular currency that day. So in the case of the CAD, I wouldn't trade the CAD today. With 7 hours to go, that is well within the day. The same would be true for the euro and pound tomorrow, which is a bit annoying, in fact, if we have a intraday trading there. But what can we do? We'll have to take a look at something else. But that is my usual, part of my trading plan at least. And I know that many do that, excluding Toronto as well, by the way. So I think it's a good practice. I think that would be a good part of your business plan as well, but that's always up to you, of course. So with that said, we also Friday we have NFP, so the entire week is definitely a bit more risky, of course, logically speaking. So let's see what the CAD will do today. Now, if I do look at the CAD, just remind me, Chris, stop. Sometimes I forget about these news events. You're looking at the CAD. Don't trade it. You said you're not going to trade it. So please remind me. By the way, if you have any questions or comments, please ask me, because besides us looking together for trades, this definitely is also a place for you to ask any questions when we implement any of these educational topics. When looking at the Forex market, and you want some extra clarification, don't be shy. Just ask me, no problem at all. I don't say that too often, so I want to emphasize that, okay, this time. And if you have any particular currencies, indeed, please go ahead. Darshan is already asking me about the odd, so we'll take a look at that in a second, right now, in fact. I'm going to do it a bit differently than usual, because what I do so far is actually look at one currency, then kind of from all time frames perspectives. And I'm not sure if that person was here yesterday, but that I think what the someone suggested more, I think, with an intensive approach. So what I'm going to do now is I'm going to scan all the currencies in one go, only on the 4-hour chart though. So we get a quick reference of all the currencies instead of fully diving into one. We're going to look at all the currency markets more quicker, and then we'll dive into the ones we find interesting. All right? So that's kind of the schedule for today. Once we've gotten a feel for the whole market, we'll dive into the ones that we like, but also more intensively in the euro and pound to see if we have maybe any intraday trading. Alrighty. Euro dollar. This is all 4-hour charts. So I repeat 4-hour charts, until further notice. Let me say it this way. Euro dollar has been climbing slowly but surely to the upside, as we know. The euro dollar monthly chart only had a 270 pip range. That is extremely small monthly candle. That is a candle that the pound yen did easily on Monday. Just to give you an idea how slow the market and tight the range was on the euro dollar. Okay, very, very, very tight range. That has, you can see that on the 4-hour chart by the light blue lines. Very slow and tedious move up, but it was an uptrend. Price has broken that uptrend, we know, and also the red circle, and also has broken the green horizontal line, which indicates the support of the day chart. Those are all broken. So by all means, the 4-hour chart is in a downtrend. We have a bottom of a daily triangle where I have the thick blue line here, blue, red, and green. There is a daily bottom of a range. So there is potential for the currency to move down to that bottom of the range now that we're in a downtrend on the 4-hour chart. Okay, so any move up should encounter resistance for continuation down. Right in here, we could continue just a bit more, but sooner or later we're going to have to retrace this move down and then make a bigger retracement for the next fall. All right, so I already told you yesterday, I'm especially interested in that blue circle there with the target right right at the bottom here around 128.50, 128. Okay. From an intraday perspective, there could be some more down move before we get that bigger retracement. That's possible. So we can look at that later on. Okay, that's the euro dollar. Pound dollar. Pound dollar, in fact, in a very neat uptrend channel. But the question is this a retracement for more downside? We would break the uptrend channel, we would break support, and we might fall very fast. From a long-term vision, the pound dollar is at major resistance. Okay, we're this resistance here and this resistance. So the currency is very close to daily and weekly resistance. That could be enough to push this back down. And this time around, we might not get double bottom, although you don't see the first bottom, but there was a bottom here to the left. The 4-hour chart is a bit too small. But we might not get double bottom, but we might get a very impulsive break. All right, that's my main pound dollar and pound dollar analysis is pound weakness and dollar strength at the moment, unless we break those red circles. And then we hook back to that. I would gladly go long up to 160. 160 is the upside target because there's a 786 fib, and the downside target could be anywhere around 140 or even lower. But I don't want to speculate on that. Could be 130, but I think that 140 is a conservative target. So at the moment there is more space to the downside than to the upside. Doesn't necessarily mean, of course, that we will move down. Right? We could definitely move up to 160, make another retrace, and keep moving up. You never know. But that's my plan in any case. So longs preferably really above, from a swing point of view, above these tops. Because any move up here could bump into retracement for that downside. All right? We'll take a look at the intraday positioning a bit later on. As I told you, doesn't necessarily mean that a small intraday trade to the upside wouldn't be good, because we could still catch pips and the currency could still turn at the 786 and we would pocket our profit there. All right, so something we can still look at. Downside, though, logically, because we're at the bottom of a trend channel, all right, even though we're close to resistance, is counter trend. So I'm not looking for that. We need rules. My rule, one of my trading rules is identify the trade, identify the trend, trade with the trend if there is a trend on the 4-hour chart. Wait for an opportunity that could be a pullback or a trend line break or a moving average break. Check the filters if nothing else is really substantially blocking the trade, and then identifying the entry. Okay, so 1 is trend, 2 is filters, 3 is the opportunity. What is the opportunity? How do you define that? 4 is the actual entry method. Okay, that's always our 4 steps. Euro pound, not interested at that at the moment. It has broken support trend lines, but it's very close to horizontal daily support at 84. Anyhow, Euro pound has been very choppy the last 6 months or so. So I'm moving on to the pound Swissy. Pound Swissy is basically breaking a daily trend line here. And it has moved up in one go some 400 pips. Quite impressive, in fact. Let's see. I'm going to break my own rule and look at the day chart a bit just to see where there is a resistance line here. Alrighty. We're still at, let's see, where's the stop? We're right at the top still. Could be interesting. We're breaking this trend line. The pound Swiss C2 has been quite choppy, just like the euro pound. If you look at this move down, then the spike up, spike down, it's been quite volatile in its movement. The Swissy quite range bound in most of the crosses. Okay, so I would tend to skip this one. I don't think it's really set up that interesting. We did break, but it's a trend line that's so expanded and so long. If you look at this, it dates back all the way to last year's summer. So we've had already a few punches through it and then moved back in. So I would still just keep an eye on it, and let's see how it develops today. If it really keeps moving forward and we get a good hook back to the trend line, we can take a look at it again. But for the moment, I think there should be better things than this. Okay. I got two people asking regarding the steps I just mentioned. What I do always is step one is I want to trade with the trend. So I must identify what the trend is. And if there is a trend. If there's not a trend, I'm looking for something else. Okay? That's my primary method of swing trading, at least. Step two is, and most of the time intraday trading, in fact, too, because I don't tend to take counter trend trades that many times. So with the trend only. On the 4-hour. If there's a range on the day chart, that's fine, as long as there's a trending mode on the 4-hour that takes me from one end of the range to the other on the day chart. Okay. Step two is to check filters, weekly trend lines, daily trend lines, tops and bottoms, divergence. Step three is what did I say? The opportunity. We might have a trend in place, right? I'll give you a schematic here on the left lower corner. We might have a trend in place, but if the currency is at the top of a trend channel, going along there doesn't make sense. You want to wait for the retrace, and going along at the bottom, for example, or closer to support, gives a lot higher likelihood of a successful trade than taking along right in front of resistance. So an opportunity would be a pullback within the trend. Okay, that's the opportunity. Step four is the actual entry method. So for example, if we get a pullback, one method would be, so I'll take it off, that's the fourth is the entry method. One entry method would be, for example, if we have an uptrend and we have a pullback to the downside, how can we trade it? Well, we can take a candlestick pattern, reversal pattern here. We can put a trend line on top of that downside and wait for the break. Or we can take an entry off a fib level, for example, which would be a direct level at one spot. Okay? So that's what I mean with entry method. A level, a price confirmation, for example, or a break. Break, pullback, or continuation, right? So I hope that's clear. If not, please let me know with some follow-up questions, okay? Dollar Swissy is on the 4-hour chart at the top still of the resistance. So nothing happened since yesterday. Dollar Swissy was at resistance yesterday, still is. Same scenario. Don't want to sell it because we're halfway a range. Looking at these black lines, we're halfway a triangle. Don't want to go long, even though I do think that the currency can move back to the top of the range just because we're right at resistance. If we move down, things change. Okay, we have an opportunity and space and a reward to risk. Because look at what we create if we get a pullback, something like this, right? More reward to risk. So not going long right in front of that resistance. Euro CAD hit our area of interest, right? to the pip. 138.40 I said, 138.10 I believe yesterday. So that's where it bounced off. Personally, I didn't get in as yet. I only traded the odd New Zealand, in fact, yesterday. And I have a pending order on the Swiss yen. So otherwise I didn't do, that's it for yesterday from my side. But it did bounce off that area. I didn't catch it, but maybe you did. Then you're up a few pips, not much. Let's see how that turns out. We can take a look at that EuroCAD later on. That's something I would put on the list for the moment. And we can do that analysis a bit more intense later on, okay? A swing trader is a trader that opens and closes a trade based on a 1 hour or 4 hour time frame and keeps the trade maybe for 1 to a couple of days. So it depends. What you have different types of swing traders. You have an intra-week swing trader. Those would typically open and close the trade within the week. Or you have sometimes a bit longer term swing traders like intra-month that would even keep the trade from a couple of days, maybe even up to 2 weeks. While an intraday trader opens and closes a particular trade within the session or within the day. Okay. So we'll go back to the EuroCAD. That's something that I find interesting here. Dollar yen. Dollar yen, we identified the uptrend, the up movement, but it has not really gone too far. It hit, I was identifying 120 as the target, right, yesterday. 118, I think. We hit 85. So we came close. But as you can see, we're not able to break really through the top of that trend channel, the light blue trend channel. Price is not able to break through it. And I will zoom quickly to the 1 hour chart now. It is a nice trend channel on the 1 hour chart here as well, as you can see. Yesterday we couldn't break this top. We made a bit deeper retracement. I was looking for more retracement. Maybe I was saying somewhere in here, wasn't I? It didn't go that far. And yeah, we're just going sideways here. I do think that if you look at the oscillator though, one more push to the upside is possible. So we'll take a look at that later on as well. Okay, let's move on. Dollar CAD. Let's see. Dollar CAD is in the uptrend channel indicated by the blue lines, but we have a resistance indicated by the black line. That's 106. That's a major resistance. So yes, price has moved very impulsively our way. We were trading this together, this up move, right? But we're stalling right now. That's because price is very close to the resistance. No one wants to go long right in front of that resistance. So looking at the oscillator, I would say the move is sustainable enough for one more upside. For me, 106 would be the conservative target. But the question is where and when. So far we've corrected quite intensively and quite a lot. A couple of days, or how long has this been? Actually, 23rd of August. That's already 1.5 weeks, so that's quite a lot. So the only disadvantage of this trade, obviously, is that there's not much of a target space here. We can take a look at it a bit better, but I don't think that it would be that interesting, but I'll put it on the list. Odd USD. We have a trend channel going to the downside, marked by the blue lines, and the price bounced off the 886 fib, as you know. We talked about it yesterday. So the question is, are we going to go to break this trend channel and hit these targets? The only time I would actually trade that is when we break these tops and we break the trend line. And only on a pullback. I'm not going to go long, as you probably know already, for those of you who have been in this room with me more often, right at the top of the trend channel. If anything, we're getting into territory that could be maybe interesting for a short. All right. Is this a triangle for more downside continuation? Or was this an inverse head and shoulders for a bigger correction or a reversal? We don't know. The only thing we know is that price is at the top of the trend channel, even if this currency would make an inverse head and shoulders. Usually speaking, the currency respects the top trend line, moves down a bit, then breaks. That's why whenever it reaches a resistance like that, you don't want to go long. In fact, it's a good shorting area for at least some pips, usually speaking. It's all about percentages, don't forget that. Okay? So the thing is that the odd has moved up so much that we're making higher highs and higher lows on this 1 hour chart. I just zoomed in quickly. And what we really need is for price to make weakness here on the 1 hour chart. We need to go up. Sorry, I'll indicate that with the green. Hit it, make some rejection off it, make a retracement there. And then, for example, a break of a 1 hour fractal could be one entry, or a candlestick pattern could be another, like that. And the target would be all the way down here as a conservative target, or here, even more conservative. Or if you like, you can even go for lower if you think it's with a trend potential to break the bottom. But we need that. We need kind of a head and shoulders pattern here or something like that. We need a lower high on the 1 hour chart to indicate that the price is respecting the trend line. Well, we don't necessarily need it, but that's my entry methodology. Okay? I don't want to take an entry only based on the fact that we're at resistance and at a trend line. Sometimes I do. Most cases, I wait for confirmation. Okay, so hope that makes sense, because the reason why is that a direct entry at a typical or a level, a direct level, is higher risk. You know, basically you're saying, I think the currency is going to stop right here. Now, that could work. It could also, you know, price could be so powerful on a shorter time frame that the currency keeps on pushing. It triggers more longs. Why? Because that's where the stop losses are, and you get a snowball effect like this. Always more risky. Well, if you wait for confirmation or a breakout, those tend to be, you have already a confirmation of price moving your way. And the Kiwi is interesting because, in fact, so the Aussie I don't think will be much of interest today, or for us within the next hour in our session. The Kiwi, the New Zealand dollar 4 hour chart. We broke the resistance here, so that is giving us an indication that the upside was impulsive, the downside was corrective. All right, so maybe on a hook back we can make a continuation to the top of the range, because that's basically what the New Zealand is in at the moment. It's in a range. If you look at those black lines that indicate the top and bottom of the range. Okay, here too, like the Swissy, we have that potential. But where am I really interested? On a hook back and break. Once we break resistance, we broke the first one with an impulse. So we can take a look at it. Not sure how, we have to factor in how important the second resistance here is. If we want to break of that one as well, and then a hook back for more. Downside is really very interesting, but only if we break the bottom support, because then there could be a lot of space for the Kiwi to weaken. That's actually true for all of them, for the Euro New Zealand and the Pound New Zealand, and even the Odd New Zealand, although it has been in the downtrend for a very long time, is in fact moving to the upside. Pound yen, we talked about it yesterday, that after this impulse, there could be a good possibility for upside continuation. Well, it hasn't gone anywhere, basically. It just didn't travel anywhere. If you look at that, I was saying, you know, let's wait. Let's not take this break. Wait for a retracement. Wait for the 4-hour candle to close and see if it can break. And it didn't, right? So I'm glad I did that, because that trade really didn't, you know, it didn't go anywhere. It's good we waited for the confirmation and didn't take the exact break. We waited for the break, pullback, continuation, basically. By doing that, we avoided a loss here, because if we would have taken the break and would not have waited for the pullback and continuation, which never happened, you know, that's good. In this case, it helped. Ever since, we've gone sideways. Just like the dollar yen, I do think that one more break to the upside, one more break of this top is likely, looking at the oscillator and the whole situation of the trend channel, the 4-hour chart as well, because we still have some space to the top. So I'll put it on the list here to look at. Your yen halfway triangle, same story like yesterday, not interested. Aussie yen, personally not interested, because although it may double bottom and is making higher highs, higher lows, this is just one rocket at the moment. And you know, if I would take the trade anywhere in here, you know, you have massive stop loss. Not good. Your odd is right at the support level at 144.40. Are we going to bounce, or are we going to break the daily support? If you're a trader that likes these levels, we're right at the support, right at it. Personally, I'd rather wait for confirmation. So you're in New Zealand, stuck in a range about halfway. Not interesting for me. Pound odd, breaking the support trend line, but still clearly above. Let me add some support lines here, horizontal support lines, that is. Clearly above the 169, 168 zone still, which I think, if I look at the daily chart, you obviously see a bit better on the daily chart how important that area is for the bears and bulls. Okay, now we are moving down pretty fast. That is definitely true, but we did that as well here. We did that as well here and here, but all of them were encountered with more upside. If you look at our band, our three amigo band, the only time we had a punch through that was here, just a tad, and at the very beginning of the trend, of course. Other than that, price has been above it. I know there are a ton of people who consider this a downtrend already and are probably jumping in shorts. But if you look at this daily, you obviously see that the 3 band is well in play still, or potentially in play, and really very early still to go short right at support with the down move already behind it. Doesn't make sense. Not here. maybe upon a retracement, if you see weakness and you get a confirmation of weakness here, you know, some price action signal, some candlestick pattern that confirms a turnaround at a higher spot. It's risky, but it makes sense. If anything, still along anywhere from here, if we get a confirmation of that, would make sense. Do we have a confirmation of that? No, because price is still moving to the downside. We don't know exactly when it will turn and at what spot. Although I do have an idea, it could be anywhere in here. If anything, one of the confirmations we could look for is a break of the trend line like this, or if we make an inverse head and shoulders on the 1 hour chart. You see what I mean? That's what we're looking for. That's with the trend still. Despite the fact that the 4 hour chart is moving down, we have to be careful, okay? Either sell from the top. Sellers don't sell at bottoms, all right? Professional traders. All right, we buy on dips, sell on rallies. Good. Pound New Zealand stuck in an up move, right? We've had an uptrend continuation, but we're at a big top and we have a pretty strong bottom here, right at the top. So we're in a range right at major resistance. When we break through it, we're long. I'm looking for longs up to 207. If we break the range to the downside, it's a counter trend trading down to the trend line. If we break the trend line, it's with the trend trading for more downside. Very simple. Okay, the currency market is showing us a roadmap. We just have to read it. That's all. So that's very simple. So if you're a range trader, I guess this is perfect for you, and you can trade it from top to bottom maybe. I'm waiting either for a break of the red or the green line or the black. Odd New Zealand. New Zealand, I take a bit of these lines off so that the chart becomes a bit more visible. That's the trend channel I have on. Sorry about that. I was just okay, good. I lost this dotted line. That's why. Okay. Well, Fibonacci basically here telling us that when we have an up move, right, when the currency stops and we have an up and a down like this, and the currency starts to retrace that up move, Fibonacci says that will most likely happen at one of these levels. It's not always the case, but many times it is. There are many levels, as you can see, and it depends when the levels have more influence. If it's a shallow retracement, these levels will be the most likely bouncing spot. If we have a deep retracement, of course, these levels will be the likely bouncing spot. We usually have a deep retracement when the currency is starting a trend. We usually have a shallow retracement at the end of a trend. That has to do with the market psychology, because when the market is just trending, there's still a lot of counter trend people in the market who don't see the new trend. If we're just in an uptrend, there's a lot of selling pressure, so we go down deep, but then we find support here and we move up. And if we're then already in an established trend, we don't move down that much, we retrace to a shallow fib before we move up again, okay? Most of the time. That is what we use Fibonacci for. And in this case, we had more or less a 50% bounce. So we got a 50% discount of that up move. We talked about it last week that that is a likely play or scenario for the odd New Zealand because we had such a strong up move that we will bounce. That is what happened. Sometimes things do take long before they play out in the currency market. So this is what we discussed last week, and it just took time before that happened. It happened this week. So, but it did happen. And what I did was I went long. Let's see. What I did actually was look at this 4-hour chart, and I was waiting for the next break. I was waiting for this break right in here. It's kind of like a triangle, right? Right in here. So what I did was we got the break. We got the break here. What I did was I was waiting for the pullback. I fibbed this move up right in here, zoomed into the 50-minute world, and had an entry order right at the 382 fib. That was, let's see, I fibbed it differently though. No, I fibbed it to here, sorry. I'm getting it confused, right here. And that was the bouncing spot to this target. All right, so that was basically, if we apply our entry methodologies to this, the 50 fib would have been, for example, it just missed the 50 fib, but just from a theoretical point of view would have been the entry methodology for a direct entry. A confirmation would be, for example, a price action signal here. A momentum entry would be if we get the break of this triangle, which is a chart pattern. All right, that's the break. Then a pullback is what I took, and you could have even taken the continuation. So that's how you can, you don't have to use all of them, but that's how you can scale in and scale out using these entry methodologies, okay? So we also came close to the bigger minus 272. Missed that by a few pips here. All right, so at the moment, let's move on to now. We have a bit of divergence maybe, who knows? Difficult to say because we haven't turned here as yet. You can see that we're about halfway here. There could be one more push up maybe. It's not the best position at the moment. I would rather wait for a chart pattern like a triangle or a bull flag before taking this to the upside. So I'm not interested in this one at the moment. Let's move on. That's about it, I guess. Pound CAD we can take a look at, but Pound CAD is, I don't have this chart prepared, but it's basically kind of in this uptrend channel. All right, so let me take a look. I'm just quickly, I didn't prepare this one, so I'm just taking a look. Wow, yeah, we're close to resistance here. We are breaking above the band though. You see that? The band is always a good indication. If we break above it, then most of the time we're back in the trend. There are some exceptions, of course, like that. We have to be aware of that. I don't know. It's close to resistance. We are at the bottom of this smaller channel. Not jumping for joy that much, but I can put it on. And yeah, we have CAD. Oh, we have CAD interest rate. So as you see, I told you I would forget it. So we can scratch Euro CAD, Dollar CAD, and Pound CAD off our list. I totally forgot about that, as I said I would. Hi Graham, good to see you. Hope everything is okay. So that leaves us. Let's take a look at the pound and the euro intraday. Okay. For the swing trading, that would leave only the dollar yen, pound yen, and New Zealand dollar. Not much, not a big list, actually. Yeah, the other three were CADs, so. Let's take a look at this euro dollar from a more wider perspective. Oh. Alrighty, so this is all of them are euro dollar charts, and I'll just go open and expand one by one all of them. Okay, first thing I want to take a look at is these. Okay, they're momentum candles. If they're painted red, they're red on purpose because that means that it's in a downtrend. It has nothing to do with the open or close of the candle. It's just indicating if it's red, it's in a downtrend. Okay? Day candles are red. These are Heikin-Ashi candles, indicating we're in a downside on the euro dollar. Four-hour chart, definitely downside, although we're light red, not dark red anymore. Okay. 1 hour chart, we're gray, not even red anymore. So definitely downside, basically on the day chart. 4 hour chart, downside but a bit lighter. 1 hour chart is neutral. That's the information we can read out of that. Let's go to our fib confluence indicator. Basically, a lot of fib confluence higher though, but that's quite high. I don't think 1 hour chart is saying a bit different. We got levels here at 152.50 and 152. I said sorry, 132.50 and 132. I think 132 is not so important. This level will definitely be important. 4 hour chart, you can see when I talked about the trend channel, the potential of it hooking back before we move down, the fib confluence here on the 4 hour chart all the way at 133.30. Let's move over to this chart. It's 1 hour chart. We have a lot of green momentum on the lower time frames, in fact. And our Elliott wave indicator is indicating that this could be a potential bottom. So, but who knows? This indicator is reaching an oversold level a little bit. Let us move on to the Camarilla indicator, okay? What is Camarilla telling us today? Well, it's telling us today that H4 long breakout is 132, and the L5 is 132.26. Still a very short, small range, as most days the euro dollar has had, and that has everything to do, of course, with the volatility, that the lack of volatility on the euro dollar the last month. As I said, the euro dollar has had basically 270 pip daily, monthly high and low. Nothing. Low shorts, L4 short breakout is 131.36 down to 131.10. So that's the space for today. I'm not taking necessarily entries right upon the break of that level. What I'm looking for, what I usually do is a move to that, retracement, and then the next break. Okay, just in case you're wondering. If I'm intraday trading. So we're stuck in halfway. So those are the key levels regarding the Camarilla. Let's take a look at this 15-minute chart. I'm going to zoom into the 15-minute chart here. Candles are green. So at the moment, price is pulling back. If we get red candles here, then we are back with the trend. Trend is still right downside, as I said. We could have the fall right in here. The Camarilla wants a break of the low, basically, right? Anything above it is an earlier short, but maybe this is a two-piece trade upon the break, down to the bottom, and then a break of the bottom. Am I a big fan of the euro dollar intraday? No. I think we should take a look at the pound because the spaces are very, very tight. And usually I do like to go for a bit bigger spaces. It's 20 pips in here on both circles. So not the greenest of grasses we have seen. Well, last thing here is this one, our band, and definitely indicating, you know, every time price goes to the band, ever since here, price is underneath. Very useful information. If we break above, we are pushing right at the moment. If we zoom into current price, we are right at the band. So the question is, can we break? Are we going to respect that band and break below here? Or that would be the confirmation. Or are we going to indeed push through for the first time and make that bigger retracement? We'll find out sooner or later. Right now, we're waiting for that decision the currency is making. Okay. One thing I did want to show you is that I was kind of intrigued by the, just quickly here, thought it was very interesting. And if we look at the month chart, put Bollinger Bands on. I was using different Bollinger Bands. Let's see, I don't remember what settings. It's a pity. Anyhow, what it basically boils down to, just quickly here, is that the last few months the euro dollar has gone so much sideways. Maybe I'll just put the ADX on. I don't remember exactly the settings I used here. I don't want to start looking for that chart because I'll just put on this one, the ADX. Okay, that here. The ADX, you see, 25 is one of the key levels, right? Above 25, we're in a trend. You can see, of course, obviously, just from a technical point of view, that we're in a range. But the ADX definitely well below the 25 on the monthly here, going down weekly as well. I was doing some research this morning on that. Just fascinated me how, in fact, even if you look at the range here on the euro dollar, that we even slowed down right halfway that range. So it's really almost like coming to a grind. It's almost like halting. It's like the wheels are just slowing down to an ever-decreasing grind. Because the band that we use here on this chart, you can see price is right within that band. It's right at this historical average almost, or at least the 10 years, right? Because the top was 160, the low was 100 kind of, so or a bit lower in fact, but you know what I mean. It's just right in between, right halfway that range. We have a sideways move like that for very long. Like the last 8 months, we've just traveled within 70 pips, except with a small spike here. So it's going to be interesting. Are we going to finally break out of that tight range to the upside here or to the downside? And if we move to the bottom or top of that triangle, are we then going to break or bounce? So that's the picture right there. Now, does anyone have, just out of curiosity, have any particular view they want to share? If you think, for example, 2 times up, right, UU, so that means that you think up, up. If you think it's going to go up and then down, write UD. And if you think it's going down and then up, write DU, down, up, down, maybe. I'm just curious what you think how this range is going to play out. We can compare it. And then I'll move on to the pound, for those of you who don't like this that much. Darshan says down, up. We have Graham saying down, up. Andrej says up. And he says up, down. So we got 2 down, up, 1 up, down, and 1 up. And 1 more down, up. So 3 down, up. So most of you think down, up, maybe down again. I don't know. That's getting a bit complicated. But most of you think, for the moment, this. Just stay in the wedge, basically, indeed. And Graham, yeah. Graham says down, up, down, up, down, down. Graham is probably going to win this contest because that's probably what it's going to do, because we know how long ranges and consolidations can last, so yikes. That's going to be a headache, Graham. I'll get into your question, by the way, in just a second, Graham. Before that. The up, Anish says up, down. Good question. Until this sideways range, was thinking up, down, down, all the way to parity or 1.110, like this. That was my main analysis. Now, slowly but surely, I am stepping away from that and reaching kind of a neutral zone and saying, let's see. But in a way, I was thinking that if you look at the daily, just maybe it's a bit too exotic what I'm thinking, but maybe wave E is finished here. And this is the first downside. This is a wave 2, and we are going to go for wave 3. So maybe it is down. Until now, I was really biased for that one more move up and then down. I don't know. We'll have to wait and see. But if this was wave 2, if this was wave 1, and this is wave 2, then what we had was an expanding wedge with an A, B, C, D, E. Maybe I'm wrong, but that's what it looks like to me. We had divergence between these tops here. Let's see. Time will tell. If it is so, then we're going to break this bottom of the range. So one point or another. Let's take a look at the pound. Oh, yeah, 1 second. A triangle, Graham, what I'll be looking for a triangle is basically just trend lines. And how many trend line hits? Well, two hits in itself would represent a potential, or it is a line. It's just that some lines, don't make sense at all. I mean, you connect any two lines, of course, in theory, from a theoretical point of view, not that it would have any value, right? I don't know. Let's say this would not, in most cases, not have much value. The one I'm drawing right now. But usually, even if you have two lines, and you have a lower high, and you have a higher low, that already in itself, for me, indicates that indecision. Because a trend should always continue with lower lows, lower highs. If we have a higher low, that is already a potential triangle. And something of a consolidation, in my opinion. So sometimes the top line has 3 hits, sometimes the bottom has 3, sometimes they have 4. For me, actually, the first time we could have already a lower high, that's already where that potential is already looming. Let's see. It's anywhere where we can get a consolidation, in fact. Just trying to take a look if we have an example here. I mean, I'm pretty easy with that. I mean, this for me is already like a triangle. Although we only have 2 and 3 hits. The 1 hour chart, okay. I don't know. It doesn't look much like a triangle as yet to me. $15-minute world could be double top indeed. Could be running into resistance, as the band is also saying. Last hour's low is at 131.60. So to me, I don't know. I don't see that much of a triangle formation here yet, personally. Just because it's maybe the top, yes, but I don't have any bottom line. Maybe only this, like that. But that's I don't see that at the moment. If it probably we need a bigger pattern. If we have bottom in here more in place and it moves up to the new resistance, something like that. It doesn't look so to me at the moment. That's why. Nice job, Graham. That was the exact. That's picking a top. Great job there. Perfect pick. So your dollar is indeed finding that resistance at that 31.76. Let's take a look at the pound. Let's see what that's happening. I think the pound is a bit more interesting for myself. I don't like such tight spaces, but let's see. Pound, dollar, Camarilla, what does it say? It's let's see. Weren't we talking about the fact that these fibs are still support levels on the pound for more upside? Well, we got that upside after the 50 bounce, as you see. The Camarilla is indicating 156 up to 156.50, and shorts down below 155.15. Which makes sense from a technical point of view as well, in the sense that if you put a trend line here connecting the bottoms, it's basically saying short, below not only the trend line but also below the last support. Short below the 618 down to the 886 fib. So that makes a lot of sense to me. And longs also break at this top up to the next resistance level. As you know, I favor the longs a bit more, but because of my long-term analysis, I can also see the potential of this moving down. So I think, though, we even break the channel. If we break this green trend line, we're in fact taking an early sell upon the break of the uptrend channel. Now we have pound news. Let me take a quick look. That's in 30 minutes. So that's getting a bit too close in a way to that news announcement for the pound. So let's take a look maybe at the euro again, because we had some positive euro news, by the way. Anyhow, that is close to that fundy. So, which is high impact, right? I think. Yeah, services PMI. So I would now be careful with the pound. We're getting a bit close to that. So we can keep an eye on the euro. Maybe if we reach in the, we can see how it breaks here. If it breaks, maybe upon a pullback and continuation. Or if we do get into the L4 breakout territory there. And otherwise, I still had 3 on the list, which were dollar yen, pound yen, and New Zealand. And we can revisit the Aussie as well. Yeah, the Aussie is very strong, so got to be careful here. Definitely want to see exhaustion materialize before shorting it, because there is a lot of momentum pushing it. And yeah, it surprises me too that it has moved up so aggressively that much. And that is a caution for any bears there in the market, because if you look at it from this perspective, this is almost looking like an impulse. This is almost looking like a correction. If that would be true, we're going to correct higher. So we've got to be very careful here. So I'm staying on the sidelines on the Aussie. New Zealand is use that place as a bounce. I'm still rather take a look at the yen, because I still see this daily support level right in here, or resistance level, excuse me. Let me take a look at the dollar yen. 15-minute world here. This might be a triangle on the 50-minute world. Yeah, a break of that triangle would be interesting in my opinion. This is the day chart. That's maybe an opportunity that I would be worth taking here along on the speculation of the fact that it would break this time around the triangle. But we never know. We could respect the top, move down again, and then the next break could be it. That's always something that can happen. Let me just take a look at the last one, the pound yen. And that too is pushing up a bit. It's a 50-minute chart that we're looking at, and it's quite spiky. I mean, what the pound yen has done here in a couple of days is probably what the euro has done in the last month, because the top and the bottom is the difference is 150, not too far off from the euro dollar in a month. So kind of wacky there. Yeah, maybe the dollar. Yeah, I don't like all of them. In fact, I just discovered. But if anything, then probably the dollar yen. So, not a big fan of the market today, as you can see. Let's take a look at this 1 minute. This is the 1 minute chart. Let's see, 99.62. Let me try a scalping trade instead. Let's try I'll just try for the fun of it to aim for the top of the triangle and take this scalp right in here. It's a 1 minute chart, so anyhow, we don't have much time left, so I'll just try that. Otherwise, I don't see much because, in fact, we can move up, respect the triangle, then break. That's something you can wait for as well if you wanted to. Let's take a look at the spread here. I don't know what's going on. Apologies for that. The computer is not working with me or something. I don't know. One second there. All right, there it is. Spread is 0.7, so that's very little. So as you all are aware and well know. So maybe 99.64, just a tad above that 1 minute fractal. Stop loss, I'll try, let's see. $99.55. It's a 9 pip stop loss. I'll go for 77. It's 13 pips. That's weird. 1 second, folks. Hang in there with me because I'm not sure it's not responding to my level somehow. Not sure why not. Oh. Weird. I don't know why. Anyhow, because that's just one way of easily calculating the lot size, but you can do it through the Admiral Markets website as well, right? As you know, you can calculate with what risk and stop loss size, what the lot size, optimal lot size would be for that particular risk. But anyhow, so I'll just take a market order. I'll just keep an eye on this dollar yen. Otherwise, it's not breaking it didn't break this trend line as yet. It's like a 1.5 to 1 trade. Now, mind you, once it does move up and it respects that, it can move back to the bottom of the triangle or just a bit and then break potentially. That's what I'm expecting. But let's see if that's true or not. At the moment, the price is moving down. So the euro, let's take a look at that. What's happening with the euro? We did break this 1 hour low. I don't know. Spaces are very tight, but this up move could definitely be a retrace of the engulfing 1 hour twins here, but I'm not a big fan of it as yet, but I'll keep an eye on the dollar yen. So let me ask you one question though before we close. We'll keep an eye on the dollar yen in the meantime. If you don't mind, this would be great to get feedback from you. So please, if you have a minute, that would be awesome. I thank you so much for that because I would love to see your answers for that. So just in case you're not aware, there's a poll in front of you. I know that some of you are multitasking. There's a poll in front of you asking you, would you like to see the room focus on one particular type of trading or have it more diverse? And the answers are swing trading with multiple or 2 strategies, intraday trading with multiple or 2 strategies, or a mix of intraday and swing trading with multiple or 2 strategies. Oh, someone's saying that option 5 doesn't look complete. It doesn't indeed. That's You're right. That is strange. Thanks for that feedback. I didn't notice that. In fact, that's not as it's supposed to be. Let me see. All right, there actually should have been 6 answers. I don't know what went wrong there. But in any case, let's say that the 5th one is just an answer for intraday and swing mixed. All right. I actually had split the 5th into 5th and the 6th, also asking multiple strategies or 2 strategies. But unfortunately, that's not possible. So we'll just have to regard 5 as a mix of intraday and swing trading. Yeah, but focus on trading. Exactly. Exactly, Darshan. So, I just want to find out how many swing traders we have here, how many more intraday focused people we have, and how many strategies would you really like to look at? Or would you rather be more focused? So 55% have voted so far. Still hoping for a bit more. So for those of you multitasking, please answer the poll right in front of you. That's good. We're hitting 65%. I'm hoping we can get 80, but that would be awesome. If anyone has a question regarding the technicals today, let me know. There are tough spots because everything, the euro, pound versus the odd New Zealand, they are making reversals or big retracements. The dollar is weak against the Aussie, weak against the pound, but relatively strong against the euro. Very funny. Do you see my charts or do you only see the poll? You only see the poll? Ah. Oh, that's annoying. Okay, then I'll close it. All right, we only got 65%. Anyone else still want to answer? Oh, okay. Goody good. So do you see my screen now? Yeah, now you should, right? Okay. I didn't know that. Actually, I thought you still saw my screen. Otherwise, I would have probably done it a bit shorter there. Sorry for that. Um, but I'm still looking at the dollar yen 1 minute chart basically, and we're still bouncing back and forth between just below that breakout level of 99.62 and 99.56. So if you have any questions, let me know. So I was just actually saying that the market is a bit yeah, in situations and setups that not the easiest. Like for example, the CAD dollar CAD, right at resistance. We talked about the dollar and the crosses, the euro versus odd New Zealand crosses already. So the yen is one of the things that could be very interesting though, because if it does break out of that triangle to the upside, that would be very interesting. If the dollar really starts to strengthen a lot, I would find that very interesting. Or if the euro odd, for example, either bounces or indeed starts to retrace very deeply. I don't really care, and as long as it shows me direction, that could be great. I mean, euro odd and pound odd are great. We had great uptrends, but if it decides to make a reversal and trend to the downside, that's great. But at the moment, it's just too early for me. That's the thing. So there could be a lot of good things coming up September, October. We just need for a bit more confirmation. Well, you would think looking at a 1 minute chart would have some action, but I think that I'm not going to trade this. The currency is awfully quiet. If you look at the spread, it's just going sideways. You see that? I mean, this is a minute chart, and it's just in a range. It's a bit weird. So probably quietness before the news event. So 15 minutes to go, I guess. Probably not worth it. Anyhow, it's just a scalp, so I'll skip this one now for the moment. I wanted to take a trade at least that I found interesting, but I'll wait for the fundy. So anyhow, that's all part of the deal. That's all part of the trading, because if there's really nothing to trade in your view of looking at the market, then that's okay. We can wait for the next hour or two. There will always be opportunities later on, so that's part of the plan to kill emotions, because basically emotions are the evil here, trying to, if we have a feeling that we need a trade or something like that, that's just setting ourselves up for a roller coaster of emotions. That's not good. Okay, so we want to trade without fear, and with discipline and patience. So with a 15-minute fundy around the corner, even a scalp is probably pushing it. I mean, with 30 minutes to go, you could probably close the trade on a 1 minute chart before the news event, but now it's getting a bit iffy. All right, so I'm going to wrap it up then. Well, first of all, thanks for joining us, and I wish you good trading the rest of the day. Be careful of the CAD, which will have a news announcement, and we'll have our session with intraday trading tomorrow. We can take a look at the euro pound, but probably will be awfully quiet, and I would recommend taking a look at something else with their interest rate decisions tomorrow. And we have a risk management webinar, and I think there will be some interesting things that you'll learn there. So I definitely recommend that. By the way, if you want to register for that webinar, just go to admiralmarkets.com, click on education, go to webinars, and by here at risk management, click on sign up. Okay, and here are the video archives, by the way. You can watch any of them. We got a complete educational, well, it's not complete yet, but it's getting more and more completed every week, because it's already quite extensive, I do believe. I mean, I think if you go through all these, it's really a good course, in fact. I truly believe so. I think you would really learn a lot. If you went through our weekly webinars there, you would really learn a ton, in my humble opinion. So Of course, there's still stuff we want to go through, like risk management. There's still a lot of stuff that we will add, but that's already a good doses, I think. Okay. Anyhow, exactly, Graham. It's the toughest thing to learn in trading, not knowing when not to trade. The weight trade, in fact, sometimes the most profitable in cases of slow, consolidations. Have to wait for those breakouts if you're that type of trader, or wait for ranges if you're a range trader. So hope to see you then tomorrow, and looking forward to that, and wish you all a good day. Cheers, everyone.
The